Hey guys, so how are you guys doing? It's been a while since last we had a session, right? So I remain your host, Michael Asukwo, right? CEO of Mars Institute and Get Reversed. So in this video, we'll be focusing ourselves on what we have been doing this month of April, on April 26th. And we did not post any videos that much on this April 26th. Reason being that we were actually really occupied with business, really occupied, right? But we did still keep posting on our channel, right? And by the grace of God, we've only missed out one trade this April. The rest of our trades have been going amazingly well. So that's on that. So this video we're going to go through we're going to go through the following. We're going to go through DXY. DXY is very important. Notice I have my pen, right? I have my iPad pen, but I also have my regular pen because I have my trading journal here for those people that are wondering, right? So we'll first go through DXY. That's what we know as dollar index, right? That lets us know as to what the market is doing. Then from there, we'll now move to Euro USD, right? Then from Euro USD, then we'll now go to GU. Then after GU, sorry for that notification, it's business. Let me put work mode on. Yeah. So after GU, then we'll now you look at US 30, S&P 500, then NAS 100, right? Now you might ask me, why am I using this combination? Now if you've noticed how I trade correlating and non-correlating pairs, right? It's a fundamental knowledge. I've spoken about this in previous videos, right? It helps us know what the market is doing per time so we're not confused. Okay, so yeah, we're going to first go through DXY, right? Because opposite of DXY is Euro USD. Then Euro USD and GU, that is GDP USD, are correlating pairs. Then after that, then we'll look at US 30, right? Then we'll look at S&P 500 and we'll look at NAS 100. At this prior time, they are correlating with each other, right? They have been correlating for quite some time and they will keep correlating, right? So we're looking at that. Now, you might ask, why am I looking at correlating pairs? That is because once you get the natural bias for one, right, it applies to all of them. That already halves the amount of time I'm looking at the market automatically. Then the second reason why is because two, the trend on its own, it might not exactly be going in bullish at that instance, right? But they have a few time lags, but at the end of the day, they still follow the same trend as well, right? For example, now if EU is buying, GU will definitely be buying, right? And it's also good to trade GU because the PIP ratio in GU is higher than EU, right? And then same also for US 30 and S&P 500 and NAS 100, right? So now, please, gold. If you're using a prop firm, right? These are for the prop traders. If you're using a prop firm, right, and you are yet to pass the evaluation stage, I advise you to refrain from gold. Don't even think on it, right? Yes, you can make money from gold. Yes, you can instantly pass your prop firm using gold, right? I'm not saying you can't. What I'm saying is that, for example, now if what you had with your account is like 200,000 naira or like $200, and you're buying a prop firm, and the prop firm is like, let's say you're buying a 10k prop firm, that's like 60k in naira, and that should be relatively like $40 or $50, right? So now note to yourself that already takes away 1/3 of what you have in your account. So you don't have the leeway to be picky. Do you understand? You don't have the leeway to be extravagant with how you're trading. So use a good lot size. I advise, if you're using a 10k, I advise use a 0.1 lot, honestly speaking. a 0.1 lot on GU can do you a lot of good. I'm not even playing with you right now, right? So by all means, it's not how fast you get there. Yes, you're seeing all these guys on YouTube. Oh, I passed my prop firm in 2-3 days. I passed my prop firm in just a day. I passed my prop firm in like, most of them are not even actually passing their prop firm. They're like giving you, sorry, I'm having a cold. They're like giving you demo results, right? That's one. Two, they can be doing like crazy leveraging. That is because they have the capital in their actual accounts to do it. For example, if somebody has like 2 million naira or like $100,000 in his account and he's buying a prop firm of like 50k, right? It won't pinch him if it goes. He can buy another one. You can only over leverage when you have a cushion. If you don't have a cushion, refrain from it. Honestly speaking, to just give you tears. So now, yeah, let's dive into the trade for the day. We're going to look at DXY like I previously said, right? We're going to look at DXY like I previously said. So DXY, right? We're going to look at DXY like I previously made note of, so we know what we're doing. DXY, dollar index. So now, the dollar index, what are we seeing here? Right, what are we seeing on the dollar index? Let's make that a little straighter. Yeah, from the previous videos that we've made on the dollar index, we go from the monthly time frame, right? We can see that on the dollar index we have been on this sell, inducement, use the pen, inducement, breakout structure, inducement, breakout structure. So obviously this is our new inducement, so we're expecting a breakout structure below at this point, right? And we've also seen this is areas of liquidity resting over there as well, right? So obviously, as we both know, as we all know rather, one and foremost, find the liquidity. If you can't find the liquidity, then you are most likely the liquidity, right? Find the liquidity. If you cannot find the liquidity, then you are most likely the liquidity. That's just the truth. So it also helps you to know when to trade and when not to trade. If you've not seen the liquidity, don't trade, because most likely you are the liquidity. So write that down somewhere. It's very important to keep that in mind. So now we're going to go to the weekly time frame. Now, as we previously said on the weekly time frame, right, we have this inducement that is here. We have this trendline liquidity. The market came up, right, to test the trend, to take out the liquidity, touched a breakout block that was resting all the way down there, and then we've been experiencing sells all the way down here, right? Taking out the pool of liquidity that has been, I use the box to represent that. So what does that mean? It means that we're still expecting more sells, right? It means that we're expecting more sells because we still have liquidity resting down here as well, right? So DXY is selling long term. I think DXY is selling long term, then Euro USD will be buying long term, meaning that our bias is buys. That means anything that is quotes of USD dollar is buys. Okay, I said this before in previous videos. I'm going to still further explain on this so that nobody is confused. So now we'll go to the daily time frame, because why not? Let's go to the daily time frame. So now on the daily time frame, we have been seeing, as previously stated in the video, right? We have inducement here, we have a breakout structure, we have a change of character here as well. But as we know, SMT traders, after it touches our point of interest POI, the first pullback is known as the change of character. So this is the pre-change of character, and this is the confirmed change of character that is here, right? So now we have our inducements. We came in to touch our order block that is over there, right? Gave us an IFC candle which it's respected and tapped into here, right? Give us another inducement here, then it capped into that, and we've sold all the way down, right? So to continue this, I'm going to go to lower time frames because I'm trying to detail the thought process so we're not confused, right? So now what do we have here? We have a double bottom, And in the previous video that I stated, even currently right now, a double bottom indicates two things. The market is going to be longing, right? But it makes no sense to be on a bullish trade when the bias is bearish. So then what does this tell me? This tells me that there are areas of resting liquidity that is there on that I labeled up with that box, right? So I mark out the neckline, which I just did. The double bottom, measure it, right? When you've measured it, take it from where it breaks the neckline, you realize that it's exactly that measurement. So it has used its double bottom, right? So now we're looking at the liquidity that is resting at the double bottom here, and you'll notice that the market took out the entire liquidity effortlessly, right? So now the next thing that we're looking at now is this bad boy that is over here. So not only did the market take out the liquidity of the double bottom, it came up and did a support to resistance schematic, right? Support, right? Imagine like this roof now, for instance. I'm jumping to hit the roof, right? There's a resistance there, right? I can't just break through the roof. But then a support is like, let's say I break through the roof and then I now land on the next pile on the roof. Then I now jump from there. That's a support. When you're standing on the ground is supporting you. That's a support. A resistance is the roof. You can't break through the roof without getting hot. That's a resistance, right? So what the market played out here for us is a support to resistance that just played out, right? So we'll now go to lower time frames. That's the 30 minutes. So on the 30 minutes, right? Let's not be shy. So on the 30 minutes, what do we see? What do we see? First thing first, counter trend. Inducement, break of structure, change of character. Okay? Now, during this change of character, there is no pre-change of character in this situation because the market did not touch a point of interest, not to my notice, right? You can call this a point of interest, right? It's feasible, right? It's feasible to call this a point of interest, right? A breaker block, if I may, right? But it's not confirmed. Sorry, it's not confirmed to be a breaker block, so I'm not going to call that a point of interest, right? So what are we saying here? In this kind of situation, when you don't see a breaker block to confirm the market to continue to sell, right? Although you can draw your support to resistance that we have here, of course, but it's always wisdom to wait for a change of character. It's always wisdom, my friends. So once the market gave us a change of character, we had a minor consolidation zone, right? Then after the minor consolidation zone, we now had a manipulation zone. Then after the manipulation zone, then we have a distribution zone, which is how we're able to make so much profit on the EU. Right, I'll be going a little bit more faster now for the sake of time. So, yes. Now, the market formed for us chart pattern. Note our bias is a sell. So even if we see a chart pattern that is buying, is liquidity, right? It can temporarily follow it, but it's not going to follow it overall. For example, now, right, this is the chart pattern, right? Ascending triangle, right? So it broke out here, right? Doing that is it's taking out all the liquidity that is resting over here. That's what it's basically just doing. It's taking out all the liquidity that is resting over here. Then after, following the natural bias that the market is giving it gave us a manipulation, because that chart pattern, even if it's a rising wedge, is still a form of consolidation, right? So after giving us a manipulation phase, it now gave us a new distribution phase all the way down, taking out the resting liquidity that we have over here, you want to be precise, right? So now that's on that, right? Then this is just a consolidation phase that we have here. Just level that out for the sake of emphasis. Then we just broke out immediately. Now, what is the market currently doing for us? Current market, what is it doing? So we know that above this consolidation phase, right, and below it, below here, we have liquidity, and above here we have liquidity. Having in mind that our bias is sell, then the market will most definitely take out our sell liquidity, which it did by doing this, right? Which it did by doing this. So it took out the sell liquidity. So now it gave us a double bottom again. That's a W shape pattern. Give us a W shape pattern here again, which is very important to take note of. Very, very important to take note of that. So now, after I gave us this W shape pattern, what next did it do? It came up for a counter trend trade all the way up here, because there are resting liquidities there. Resting liquidities meaning resting orders over there that the market is trying to take out. So now, having this in mind, it now still gave us again a triangle, right? An ascending triangle, right? So what we are currently in as of right now is a manipulation phase, right? What we're currently in as of right now is a manipulation phase. Once the manipulation phase is over, what we are expecting is a distribution phase all the way down here to take out this liquidity that is resting at the bottom, right? And as well as this liquidity that is resting down here, because we know our bias is sell. That is on DXY, right? So now it's taking out the liquidity that is resting here first, right? It's taking out this one first. It already took it out. They already took out this one already. This one has already been taken out. There's no other liquidity that is resting here, because this other liquidity that could have been here, right? This one that could have been here has already been taken out, right, by this manipulation that happened. Okay, so this is where we are now. This is our current market movement. It's taking out this liquidity that is there. After it's done, that's the manipulation phase. Then you can see a distribution happening here, guys. Now it's going to sell, right? So right now, we are currently in the manipulation phase, right? Whatever happens during the manipulation phase, then we now see distribution play out. Then we now see the sell movement. So that's what we're expecting on DXY. We're expecting a buy to sell schematic on DXY, okay? Now, having this in mind, okay, I emphasize having this in mind, what I will be expecting on EU and GU, that is Euro USD and GDP USD, right, is a sell to buy schematic, okay? I remember I said that in DXY we're expecting a buy to sell, so in EU and GU we're expecting a sell to buy. So it's a thing of how patient can one be. Do you get? So I drew this baseline liquidity because I noticed that there was a lot of resistance to support happening here, right? Let's just say we have, oh, sorry about that. Sorry, my bad. Yeah, so we have a resistance here, we have a support here, right? Another resistance here, another, what's it called? Support, resistance, support. So it's actually a very important zone, right? It's a very, very important zone, as it were. So let me just save this. Okay, it's saved. So now, currently we're in the manipulation phase. You can trade the manipulation phase if you want to, but I personally, I like following my bias, so I'm not trading the manipulation phase, okay? But you can if you do want to, but it's risky. So now, I like to concern myself with distribution phases. So currently we are doing distribution right now, okay? We're currently doing manipulation, then distribution. That is buy to sell schematic. That means with EU and GU, we're going to be doing sell to buy schematic, because we've understood that since DXY is giving us shorts, then that's sells, then GU and EU will be giving us longs, that's buy, okay? So now, having this understanding in our cerebral cortex, in our brains, the next thing we're going to do is go to EU and break it down. So we'll just go to the 4-hour and break down from there, right? So you remember when I said that we had a rising triangle, right? Well, let me go to 30 minutes. Let's go to 30 minutes. All this, I've already explained it in previous videos. So for the sake of time, we are not going to explain it right now, for the emphasis of time. So now, okay, 30 minutes. 30 minutes. Yeah. So remember when I said that DXY was giving us an ascending triangle, right? This was giving us a descending triangle. Okay. So then, since we got give us a descending triangle, as I said, polar opposites, the market first came to take out the liquidity that was resting over here with a manipulation phase that we see out here, right? Then the market came out to sort out the liquidity that is resting up here, right, which is our distribution phase, which played out for us perfectly, right? Broke out, gave us the consolidation phase, right? That means there are still resting liquidities over here and here. Not even like, yeah. So everything. So the market just went all the way upward, taking out the liquidity that we have at the up end because our natural bias is bullish, right? So after doing that, it gave us a double top schematic rather. Notice this is a double top schematic that it just gave us, right? Meaning that, like I said previously, there are liquidity orders resting up here for the faking. Yeah. So let me just keep that still. So now the market sold all the way down here because aside from me measuring from Uno to Dos, yeah, trace, that's the complete sell that we had there, right? The market was targeting this liquidity that is resting here, right? The market was targeting the liquidity that is resting all the way here. So it's targeting that is what gave us what we need to know that that's the reason why it came all the way down to sell all the way down to here, right? Now it gave us a consolidation phase, right? Now what I'm going to say about this is, if I delete this, it's a triple bottom, right? Triple bottoms, that's 1, 2, 3. Most likely it's sell up immediately as just this triple bottom. But then there is another way to look at it, right? It's giving us liquidity area points here, whether we like to see it or not. Yeah, it's giving us liquidity area points over there, right? So now, me personally, what I feel is, let me delete these arrows first. It hasn't yet given us our manipulation phase because, like I said here, that's liquidity, yeah, and there's also liquidity that is here as well, right? So it hasn't yet given us our manipulation phase, right? Or rather, should I extend the liquidity, like, it's better here, yeah. So that we can call this manipulation. It's feasible, right? It's feasible. For me personally, I'm going to call this the manipulation phase, whatever happens below here, because we have liquidity resting on this and we still have liquidity below here as well. Then I'm going to call up here a distribution phase all the way up to where we have liquidity resting here. So we're currently right now in the manipulation phase. Right Once it breaks out of this support to resistance zone, then I can be looking for buys all the way up here, right? But if not, what I believe it might possibly do is give us a sell to buy schematic. Yeah, the sell can be a little bit longer because, yeah, it can take out the liquidity that is here, which it already did, and take out this one as well to fuel the up buy movement that we need all the way up to here. You understand, guys? So like it's going to go all the way up. Yeah, I can just be going all the way up from there. So that's my honest viewpoint on what is happening right now in the markets concerning Euro USD. And this also applies to GU as well, if I'm to be honest. Sinks rather, to be honest. It's basically the same thing because they are correlating. Yes, we're going to buy right now, but we're currently in the manipulation phase of it all. So remember when I said this was consolidation, then this was manipulation, right? And then all the way up here was distribution, and we made like crazy money from that, right? So now we have our double top rise right here. Obviously, as I said previously, we have liquidity that is resting up here, which is interesting. The market, there was also liquidity that was resting here. I mean, look at all this, look at all this points of liquidity. You know, come on. The market obviously had to take all that out. So the market took out all the liquidity that we have all the way down, took it all out completely. Yeah, it took it all out completely. Yeah, then we have a support line being drawn, right? So let me delete this. Now the market reached the supports first time, went back down, reached it the second time, gave a breakout, which is a fake out basically, then it went back down, then it's reaching the third time, right? So what I'm expecting is it might still go back down a little, right, before we now see a final boost all the way up, right? So we're still going to be looking out for shorts, a little, what's it called, a little sell to buy, but like it's going to be very, very little because, as I previously said, this is liquidity that is resting here, which it has obviously taken out. It now formed us a new liquidity line over here, which is very interesting, meaning that it's still going to be selling a little, right? It's still going to be selling a little, right? Before, and even sell and take out this leg with the IFC candle before we now start seeing longs all the way up here, right? So that's on GXY, EU, and GU. Okay. I'm going to do, because it's already 30 minutes, it's almost 30 minutes, and I don't want to rush US 30. I don't want to rush US 30. I don't want to rush NAS 100. I don't want to rush S&P 500. So we're going to leave it as this. Okay. So that's it on that. Thank you so much for being a part of this video. Right? Like if you loved it. Sorry. Like if you enjoyed it. Subs if you loved it. Please do share it around. Let's all build a community of traders while learning from each other as well. Comment what you think on this video, areas where we can improve our analysis as well. Please comment. On the description box you will see our Telegram channel, right, and you will see how you can contact us from even our Telegram channel as well. Okay, you have our website up there. If you want to learn from us, I do advise go to the website, see what our offers are, then you can go to the Telegram channel, reach out to us on our Telegram channel, right? We normally, when we post our results, we normally keep a hashtag there if you want to request to learn from us. Okay, also if you want to invest from us, that's our Get Reverse platform, then I do advise you still go through that channel, and when you're messaging the individual, that's our admin, you type there, I'm interested in investing or I'm interested in learning, then we'll immediately reach out to you as soon as we can. So that's it from us at Mars Institute. Thank you so much for your time and have a blessed day.